The broadcast is now starting. All attendees are in
Well, good
listen-only
evening,
mode.
ladies and gentlemen, and thank you for being with me for this Danielcode tutorial this evening. My name is John Needham. I will be the host for today. In fact, I'm your host for every day. Wonderful to have all our old friends with us. Toddy's with us from Southern California. And thank you, mate. Oh, he's from Kansas. Is that the same Toddy? Must be a different one. Thank you very much, Todd from Kansas. That's wonderful. You're on the ball. And he's happy to tell me that sound is good from Kansas, which means our technology is working, which to me is always a surprise. I'm a Luddite. In fact, I'm a past chairman of the International Order of Luddites. And Luddites are people who don't understand technology, and therefore they oppose technology. And I'm the same. I'm come from an era when we did everything with pen and paper, and the pen had ink in it. And I have 3 pens, a red one, a black one, and a blue one. And let me tell you, if you go into most stationery shops and ask them for some Quink ink, they'll look at you like you've got 2 heads. And those are the joys of being a bit older. Okay, so grand to have you all with us. We've got all our usual stalwarts here. I'm so grateful to you guys and gals who keep turning up for these webinars. You know, you're the reason I still do them, and it's terrific. Bob Parry's with us. Haven't seen you for a long time, Bob. Glad to have you with us. David Samuels, of course, that's Lockie. Grand to have you with us. Lockie, hope you're well up there in beautiful Brisbane, my friend. My daughter, Bodie, is a doctor now. She graduated from Notre Dame Medical School 2 years ago, and she's she says, I'm a doctor getting paid. She's thrilled with the idea, and she works at Royal Brisbane Hospital. So I'm spending a bit of time up in Brisbane these days, where I lived for 10 or 12 years back in another era. Gig's just joined us. Gig's a wonderful supporter of Danielcode and a world-class golfer, which is his great passion. And he's from North Carolina, and he's done his tutorials, and he's a very, very keen trader. Jeff's with us. Jeff's a farmer, and he's just started doing his TTT Danielcode tutorial. So I hope you're enjoying all of that, Jeff. Mark L is with us, of course. No party without Mark. He's with us almost every day, which is wonderful. Many other Marks, one of whom is Mark K over in the land of the long white cloud, New Zealand, where I lived for 12, 13 years. A wonderful, wonderful country. Really is. I always say that well, they've got rid of Jacinta now, so the little burst of insanity has passed. But I always say New Zealand's like Australia used to be 30 years ago, and that manages to piss off everyone, Australians and our Kiwi friends. But I mean, Australia is so overburdened now with regulations for everything. It's just bureaucracy gone mad. And of course, our present Labor government, they're dedicated to just keep pouring it down the drain as quick as they can. Anyway, nothing lasts forever. But I must say, I don't see the Labor Party in Australia having any troubles for many years, because the opposition is just, a Liberal Country Party is just totally pathetic. That applies to the Liberals, not the Country Party. Country Party, very good people, but they're a minority. Anyway, let's move on and see. Rolf is with us. Rolf's a Kiwi, but he lives in Melbourne. Glad to have you with us, Rolf. Rolf, if you, I know you've sent me a couple of emails, and I haven't responded to them because I didn't see them. Will you get rid of that New Zealand email that I only visit very occasionally now, and use the jneedham@thedanielcode.com email? That way I'll see what you're sending me on the same day. Michael Fowler's with us. Welcome, Michael. Glad to have you with us. And let's keep going here. We've got a fantastic webinar lined up for you. today, and it talks about all the things that I like to talk about. And we'll get on to those very quickly. And Sarah's with us, and Sarah's a young lady from Melbourne in Victoria. That's a southern state in Australia, and she's just started doing her TTT course, and I'm going to talk about you in a few minutes. Sarah, lots of others are here with us, many Peters, Peter Mack, who's not a day trader, and the others, and thank you, all of you, for being with us today. Okay, Sean's just arrived. Sean from Adelaide. Good to have you with us, mate. Wonderful. And Vicky's arrived. Well, Vicky, you have another lady as company today. Vicky's usually our sole lady member here, and it's grand to have you, Vicky. We do not have enough women members, and we're always particularly happy to welcome those that we do have. Okay, so today's webinar, I'm going to talk to you about futures and forex markets, which are actually my pet topic. I would rather talk about futures and forex market in preference to almost anything else, but not including, of course, sailing, which is my great passion, yachting. But remember, markets are rational, orderly, and sometimes predictable. But your survival in the market requires strict adherence to the rules. And I'm not sure that all of you know the rules. In fact, I can put money on the fact that you don't. And that's why yet some of you are not getting the results that you should. And what I'm showing you now, this is a new webinar I've done during the week. I did it without an audience, and it's simply based on why your return on your ROI is ordinary or depressingly poor, and how to change all that. It's a absolute fact that in this massive, massive industry of trading financial markets, the traditional results are truly, in my view, pathetic. For fiscal 24, the top 20 hedge funds in the world returned 8.6%. That's the top 20 in the world. All of them are pretty well closed. That is, they're returning money, not taking new money. And those that are open pretty much are only open to institutional traders. So you're not going to get into one of those hedge funds. And you'd be lucky not to get into them, because 8.6%, less their fees, which range from sort of 3% up to 4.5%, is not much money. You might be one of these slow old stocks traders who said, oh, I'll get it over years and years and years. Great. If you're young enough, that's fine. And if you're patient enough, that's also fine. But if you're in the business of making money, which is what futures and forex trading is about, traditional returns are not fine. And that's what makes the Danielcode so different. And for those of you who are new to Danielcode and you're perhaps watching this recording of today's webinar for the first time, bear in mind that what you're going to be looking at is like nothing you have ever seen before. This is not the sort of trading that hedge funds do. This is not the sort of trading that CTAs do. This is something entirely new and different, and it's new technology and it's new thinking. And that is new to you, not new to us, of course. I've been doing this for well over 30 years now. I mean, my daughter's over 30, so yeah, so let's say 35, 40 years now. It's a good long time. I've devoted a large part of my life to this magic that we see and that I've created over the years with help from many. And I'm just going to highlight some of those issues for you today. In the meantime, folks, I need your help. We need more Danielcode members. If you're enjoying our bi-monthly webinars, please share them with a friend, preferably all of your friends and your family as well. And just suggest that they take a free trial of Danielcode so they can see what we do. And pointing your friends at the greatest money-making tool I know of can only be beneficial financially. And it's also, I find, hugely beneficial intellectually. I'm getting to an age where there's a bunch of people I know who are starting to slow down and be really seriously impaired mentally. And if you can keep mentally active all through your life, you'll be much better off. You'll be much more healthy. But if you introduce anyone who buys one or more of our products, I'll be happy to comp you one of our TTT video courses, whichever one you want. So I'd be most grateful for your help, folks. People come to us, they do their course, they've got what they want, we don't see them again. Others aren't trading at such a sufficient level. They have lost that little edge to see what's new and exciting, which means they're missing out on a lot of things. So let's move along. So as I said to you, markets are rational. This is a chart that you've seen over the years many times. This is my messy looking thing, as you can see, is a long-term chart of UST bonds. These are 24-day bars. In other words, every single bar on this chart is made up of 24 trading days. And this market starts off with that big gap that's got the yellow oval around it. And that was when Volcker, the then chairman of the Fed, had to put out the dreadful scourge of deflation. And he'd been pushing interest rates up a bit. They're up around 8.5%, 9.5%, not making any difference. He got thoroughly sick of it, and all of a sudden he jacked up interest rates to about 18%, maybe 20%, and then a week or so later they went to 22%. Well, that beat the inflation genie to death, and that's where this chart starts. And you can see that this market ran all the way up through the thin red lines, which are parallel lines to the thicker one, which is the median or mean of all of those bars. And you can see that the high before the high hit the two deviations from the mean perfectly. And that's when we stopped moving the red line. I haven't touched this chart since September 2016. It's just been running on its own because all of those levels were created by this proprietary Danielcode tool, which is extraordinary. And all the way down, we've seen this market find support at every one of these dotted red lines, except one when it went straight through it, and that was in 2022. It totally ignored that level and bounced down to the next level. And what we're seeing now is this. Really, this is a fight for the US T-bonds. It's a fight for the heart and soul of T-bonds, which desperately want to go down. And the last little rally we had was really the PPT in action, the plunge protection team from US Treasury. And it's not a myth. The US government interferes to support and sometimes suppress markets through the normal market mechanism. So this thing is absolutely precarious. It's sitting on that last support, which is 6 Danielcode deviations from the mean. They're not standard deviations as is normal. They're Danielcode deviations. And the whole of this rally up and then the whole sell-off since 2020 has been totally controlled by these Danielcode time and price levels. Remember, any line that's an angle has qualities of both time and price. And bonds is in play, and it's terribly, terribly interesting at the moment, and you should be watching it like a hawk. I even got an email from Bo today saying he's got a whole lot of signals and time cycles involved in UST bonds. So our main function that we do is time trading. And I want to show you what started it in a serious manner in 2007. I had understood the concept of time trading well before that, maybe 95, 98. But this is what formalized our approach to it. In other words, this is what started it all. This is the S&P chart. And in 2005, 2006, we had the dot-com bubble and the dot-com bust, and the market was just cruising along, up, up, up all the way. And eventually it made its high in October 2007, which coincidentally was just a month after the Danielcode website went public, and it's been public all that time. What I noticed is that from a minor counter trend to the swing high in October 2007 was 59 cycles. In other words, this is a 6-day chart. Every bar is made up of 6 individual trading days. And that high, the very important 2007 high, came at exactly 59 cycles, 59 times this tool, which you can see. And that meant nothing to anyone except me, because I knew that 59 was twice the time cycle in Danielcode. The major time cycle for Danielcode is 29.6 days, or 29.6 any period you like, and times that, the rule says it shall be for time times and a half, times that is 59.3. Now, you can forget about anything after the decimal points when you're dealing with Danielcode, because almost 1/3 of bars are not even on these charts. That's weekends and public holidays, which together total 29.7% of the whole year. And they're just not on the chart. So there's a systemic 33, almost 30% error in all of these bars, and how the Danielcode overcomes it with its time cycles is one of the great mysteries and wonders of what we do. So bear that in mind. Bear also in mind that these time cycles, because of the same reason, because of the missing bars, these are valid for plus or minus 1 period. Sometimes the time cycle can come 1 period early, sometimes 1 period late. And it can also switch between the 2 different patterns. In this chart, you can see the 59 arrow goes up to the swing high. It has the highest bar with lower bars either side of it in October 2007. You can also see that the bar immediately before it is the closing high. And that is, it has a higher close on that bar than the swing high. And closes are very, very important in Danielcode market analysis. So I saw this happen. I got terribly excited about it because I was learning and discovering all about our Danielcode time ratios, and this thing struck a very loud gong for me. So what I thought most likely is that that cycle would repeat. I expected the 59 cycle repeat, and it did. And you can see at 118 cycle, which is twice 59, that gave us the closing low of the crash all the way down through into March 2009. And that gave us the closing low. The very next pair is the bar is the swing low, but the bar before on the 118 time cycle is the closing low. Very important. And some of you will remember I was actually running a tutorial in New Zealand at the time. Mike, you might have even been there. 666, the number of the beast, was what I forecast that low was going to be, plus or minus some ticks up. Actually, you can find the actual chart if you go to our chart archives link on the Danielcode website. You can find they're all graded by dates now that Terry's got all those parcels together. You can go to March 2009 and you'll find the absolute exact chart that members saw at that time. And the low was 666 something or other, and that's exactly where it stopped. Now, remember that not far before that, this thing had got so bad for market participants. We had people jumping out of buildings and all the horrors that happen in seriously downtrending markets. So, and here's what happened. So it did that. It found the low exactly where I expected it and at the right number. And after that March 2009 low, the 59 cycle on our 6-day chart went dark. It was giving us some minor highs or lows, but nothing any meaningful. And what that means is that this market had switched to a different cycle. But the dominant 59 cycle endures. It goes quiet sometimes quite long periods as this did, but it's still counting off its cycles in real time. And from that closing low of March 2009, the 59 cycle roared back to life in 2018, giving us the swing high, and the closing high, respectively, of the three major corrections which culminated in the COVID flash crash of February 2020. That was the shortest bear market in history. It lasted only 24 days. And of course, we got every penny of it. And have a look at this. This is the same 59 chart. I've just moved it along in time. And you can see I've put a vertical line through the relevant points. You can see that these are the three reactions, starting with January 2018. And that reaction there doesn't look very much at this time because the market's gone on to swamp it in all directions. But at the time, that was about the biggest correction since 2009. And that happened right at a high on our 59 cycle count. We're still looking at the 6-day chart here, folks. The next 59 cycle gave you the next high for an even bigger reaction or pullback. And finally, two more cycles on, we got exactly the swing high of what turned out to be the COVID flash crash, 24 days down. And amazing, the emotion that was put off leading into it, and emotion how quickly that negative emotion passed when it completed its low 24 days later. So these three patterns are so important. I call them bulwarks. And a bulwark is actually any object that is an obstacle, but the normal use for it is the sides of a ship or a boat that come above the deck and shelters the cargo, the passengers, what have you, from spray, and that's called a bulwark, and it stands against the waves. So I suggest that these three corrections are the new bulwarks from the times. Yet, amazingly, the same 59 cycle you're looking at here, it's gone on, it's still giving us time signals, which is amazing. So this updated chart, we have a 59 cycle running from the October the 3rd, 2018 swing high, and another one, 59 cycle chart, running from the COVID crash low. Remember, they're 59 and 118 cycles apart, the three of them. And what's happening is that the cycle running from the high, the flash crash, the correction before the flash crash, that high, that's giving us highs as they occur. And they're the three blue arrows you can see on your chart there, pointing up. And we've got another one due not far away. And the arrow, the cycle that's running from the lows, the COVID flash crash low, they're giving us lows, and that's the red arrows. You can see a couple of them there. They've been giving us the lows of the S&P as it moved up, and there's another one of those coming as well. So most important, let me tell you, this is that markets can invert. In other words, when you're expecting a high, you can get a low, or when you're expecting a low, you can get a high. And look at these dates and make sure you're aware of them. The next cycle of the 59 is due in the 6 days ending August the 13th, and the red cycle is due in the 6-day ending September the 16th. Okay, keep an eye on those. They've been working terribly, terribly well. This is the 24-day chart, which is the strongest indicator of these things. You'll see the same thing where it's found the three corrections there, and I'm running time cycles on from there. And you'll see the blue arrow pointing up that ends the month, if you like, these 24-day charts, the Danielcode version of a month, the month ending August the 29th. So that's quite a big date. And there's some argument about whether the earlier cycle from the 6-day chart would apply that I've just shown you, or whether it would be later in the month of August. And what you need to do if you're interested in market timing, which you should be, because it's like everything, it's just your life, for goodness sakes. And if you're obsessive as I am, it is just your life. Make sure you stay tuned in to the fourth seal from Frank DB, who does the fourth seal forecasting for us now. And Frank started off as a tutorial student. He came to me to do a tutorial in New Zealand. And he was a young man then. He's probably still young now, but he was very young then. And he brought his new lady friend with him. Her name is Anne. She's a charming, delightful lady. She's now his wife, and they have some beautiful children. He said, I've never seen a financial chart, but I like the way you write. And I used to write a lot of articles for Financial Sense and Forex Journal and a couple of others. You can see them at the Danielcode website. They're all under the tab that says articles. Frank then, that was the very first year I taught the fourth seal to a tutorial. And Frank went away and he grabbed that as his thing and his passion. And he's dedicated years and years of his life to just refining what I was teaching in those days. And he's now so good at it. He is, in my view, the best timing guru in the world. And he's made some amazing calls even recently. And sometimes those calls are not what you expect. Famously, at a couple of the recent highs, he said, these are not the final highs. This market has to go higher. It has to go higher. Amazing. And, of course, everyone jumps on the bandwagon when it's over. Frank's the only one who does it before it happens, which is the mark of Danielcode. All the Danielcode signals tend to come a bit early, and they're designed to do that because unless they come early, they're useless in my view. So, and I really want to get you thinking, folks, about what we have been calling Beyond Masterclass. I think it's an absolute treasure, and I think it's misunderstood. And that, no doubt, is partly because it's badly named by me. Beyond Masterclass means nothing to most folks. But in fact, it's a vital tool for your trading because it forecasts volatility, which we would call the trend ability. The ability of markets to trend. And when you've got markets with a high degree of volatility or trendability, the words are interchangeable the way I'm using them at the moment, markets moving up and down fast, you make a whole lot of money. And if you're trading markets with little volatility, you're going to struggle, or worse, you're going to lose money. And I'm going to change the name of that tool. It's one of our TTT courses. I'm going to change its name from Beyond Masterclass to Trend Ability, which would better describe what it does. Now, traditionally, people think the VIX is a useful tool for that. It's not. It's hopeless, and it's directionally biased. This tool shows you, and it does it in a defined way. There is literally a tool, a Danielcode tool, that comes with the Beyond Masterclass, soon to be called Trend Ability tutorial on TTT. You can use that tool if you've got Trade Navigator. It saves right into Trade Navigator. If not, I'll give you the code of what you need to do to create that tool in any other platform. And it's everything. And I've got to say, even the guys who've done it, and some of them are our very best traders, they're pretty unenthusiastic about it. It didn't sort of ring any bells for them. And I think that's wrong. I think this is so vital a tool. I rank it right up there with the ability to create and trade time signals. It's not getting that recognition, which is crazy. Now, have a look at this. Sarah, who's a most charming and lovely young lady, who lives down in the state of Victoria, one of the southern states of Australia. We have an occasional chat, Sarah and I, and sometimes her baby. And we do that sometimes on Wednesday afternoon. So Sarah's doing her TTT course now. And this was the piece of chart she chose for her first bit of paper trading. And this is the mini Russell. In fact, this is the micro Russell, isn't it? And as you can see, I put a couple of great big pinky looking triangles on here. And what they are is they are the areas of the chart that did not create a Momo bar, which is what I have been calling the Beyond Masterclass bars. They are absolutely defined quantity. And what we are seeing and have seen back in history, as long as you want to go, and I test all this stuff back to about 1924 or so, where I have the data, where we do not have Momo bars, we have a consolidation. Sometimes consolidations are just obvious, they go sideways. These are a different sort of consolidation, but they're just as deadly because you can see that these bars are going up and returning to the range, going down and returning to the range. In other words, this is range trading, and you do not make much money out of it. In fact, these two periods of bars with no Momo bars in them are another form of consolidation. You can't pick them with your eye unless you understand and have the Beyond Masterclass tool, which makes it quite clear there's no momentum in those two patches of trading. Now, we cover 9 futures markets, 10 actually with the Germany's DAX, and 9 forex markets, I should say, and 11 futures markets with Germany's DAX. There is always a market that has got a trending signal on it. These are much more than your eyeball. I always say to everyone, make sure you're trading active markets. Don't trade dull markets. Well, that's easy to say that, but you really will be much, much better off if you've got a tool that tells you there is no momentum bar here, or conversely, yes, there's a momentum bar there and it's a confirmed trend ability signal. It's the difference, folks, between everything. As I say, I've got that in my list of priorities. It's right up there with the ability to create and trade time signals, which is the basis of our whole trading life. It is to me anyway. So very, very few of you have taken the Beyond Masterclass course, and those that have done that course were not very impressed with it and likely are not using it now. And that's crazy stuff. A bad market patch of bars with little volatility or no trendability simply ruins your P&L. You can't make money on those charts that are taking to a high and reversing to close in the range, taking to a low, then reversing and closing in the range. That's what is the problem with almost everyone's trading. So true sideways price action falls into this category. But this, as you saw in the previous chart, these are other patterns that are not obvious to you unless you understand the tradability or Beyond Masterclass tutorial and its tools. Okay, all of you are focused on your pet favorites. 80% of people say, I want to trade S&P and gold. Why? Because you know about it? Because you heard someone talk about it? That's not a really good reason. What's a good reason is this market is about to trend, or it's given a trend signal and that's now about to fail, which gives us a wonderful trading opportunity. So think about Chanel. He is a new member of Danielcode, and he did the full tutorial, the one-on-one masterclass tutorial with me while he was living in Bangkok. And then he got ill. He had to come back to Canberra. And he's a very, very clever man, a delightful person. And what he did, and I've talked about this in detail, and shown you the receipts and the broker's order forms. He's a great believer in crypto, particularly in the small coins. And what he was doing, he thinks that those small coins in crypto are going to be the basis of the future economies. And he may well be right. I wouldn't bet against it. But what he did, he learnt the Danielcode tutorial, which is based entirely on futures markets. But futures and Forex and crypto are all exactly the same thing. Now, don't all get shocked and horrified and throw up your hand. What price and time bars on a chart are showing you is the combined psychology, the sum of the psychology of all of the players. And people are happy, they're feeling bullish, they think things are going to keep getting better, they'll buy a market. When they're depressed, they think there are things to worry about, or even the market may be going in the wrong way for them, they'll sell a market. And that's what creates bars which we trade. And that is all the same thing. It is all mass psychology. So here's a guy, Chanel. I never showed him his crypto chart. I never even looked at one with him. I taught him to trade futures. But he took that and he started a couple of trades in Rumble, which is now a futures. There's a futures contract on Rumble as well. It's one of the small coins in the Bitcoin world. And he turned $5,000, Australian, US dollars, I should say. He's Australian. If you trade in the US, you use US dollars. He turned $5,000 into $200,000 in a matter of a few weeks. And he wrote, and I've shown you his emails anyway, he said, I got into these trades based on Danielcode time cycles, and I stayed in these trades based on Beyond Masterclass from the Danielcode. And you can do the same thing. And you can do it in futures, and you can do it in Forex, and you can do it in crypto. And let me tell you, Forex is absolutely massive on this indicator, as is crypto. Forex probably at the moment has more trendability than any other market. And I'm only going to show you one Forex chart today because, as usual, Trade Navigator don't provide intraday data for Forex, not to me anyway, and I have to wait. I don't get to see the last bar until 6:30 when the data comes out. So, what's the most common trading result for folks? You've heard it. I hear it all the time. I made some money. I lost some money. Well, what happened? If you had a winning, properly tested and properly structured trading concept, why would some of those trades win and some of those trades lose? Well, what happens is markets change. Markets go from trending to consolidating, to trending to consolidating. And within those definitions, sometimes it's chasing stops, sometimes it's trying to find support. But markets change, and the tool that tells you that's happening is the Beyond Masterclass tutorial tool, which I will give you with the, if you take that tutorial. It is absolutely vital. Have a look at this. This is the one Forex chart that I was going to show you. You can see the Beyond Masterclass, I call them MOMO signals or momentum signals. They don't come at the high or the low, but they tend to come pretty soon afterwards. This is Euro Japanese yen. This is the Euro yen pair. You can see I've marked for you the confirmed MOMO signal. Look what happens from that. You remember I've talked about this to you many times. That's a clue to move your stops away from our normal very, very tight one bar stops. Move your stops away and give the market a bit of room to move because it's trending. Look at this thing. Today's close, that single trade, one single trade on one contract, if you don't mind, $5,000. And many of the Forex pairs are doing something similar. And that is purely knowing beyond masterclass. That is simply having access to that tool that I've invented and created over the years, and it will change your life. I know Mark L's with us today. He's kind enough to say John Needham and Danielcode changed my life when they taught me how to trade time signals. This will change your life as well. Forex, I don't talk about it as much as futures because, as I say, we don't get the data till late, and I'm usually doing these webinars for you at 3 o'clock in the morning or thereabouts. My 3 o'clock. And that's your 1 o'clock in the afternoon. But this trend ability of Forex is, I've said wow, it's not an expression I use very often, but wow, it's serious stuff, isn't it? I have been on this trade all the way through and a couple of others just like it. And I am thrilled. I am amazed and I am thrilled. And I invented this stuff, for goodness sake. If you're not getting this, you are losing a huge opportunity to increase wealth. And let me tell you, when you're winning at trading, your life is good. It gets better. It certainly beats the hell out of losing or breaking even. Okay, and it certainly beats the hell out of sitting around on stocks and waiting for years and years and years for your 5 or 6%. Goodness, here we have it. We have all the possibility of profit in the world, and it's not happening for most of you. Okay, so what's Gig saying? It's not showing. It does stop me from entering trades. No need to make public something or other. Not sure what he said the last word there. Just my response. Okay, so this is a guy, Gig's a really good Danielcode client. He's done the Danielcode masterclass. He doesn't get it. He says it's stopping him from entering. I don't know why it would possibly stop you from entering, but we better have a talk about that, Gig. Set up some time and I'll have a chat to you about it. There's absolutely no reason why this would stop you from entering. Quite the opposite. This is the one that says, stay in this trade, move your stops away, give it a bit of room to move, and you will be rewarded. And like everything at the Danielcode, folks, this is what I call a light switch solution. It is either on or it is off. The signal is either created and confirmed or it's not. And there you are. And I don't think many of you are getting the benefit of this. I really don't. Okay, let's move on. So this is an email I got recently on the 8th of this month, in fact, from Justin, who those of you who attend these webinars normally have heard me talk about him. He's a young gentleman from the Hunter Valley in New South Wales, Australia. Beautiful, absolutely beautiful part of the world. It's where all the big horse studs are, so it's equivalent to your Keeneland in Kentucky. A wonderful, wonderful country. The grass is so green you could eat it yourself. And Justin's been kind enough to update us on his trading. And this is real money trading. Occasionally get a little jibe from someone saying, oh, paper trading doesn't count, backtesting doesn't count. Well, it does if you know how to do it properly. And what Justin's done, have a look at the website, the Danielcode, www.thedanielcode.com, and have a look at the video number 4. There's 4 of them on the homepage. Number 1 is from Mark L., who pretty well pioneered paper trading, if you like, and backtesting in futures markets. And he also gave us the results of his backtesting in gold. Incredibly generous, these people. And so is Justin. So, of course, is... lost his name for the moment, it'll certainly come back to me, who posted the findings that he learnt during his Danielcode Masterclass time tutorial in forum. Greg Palladini. How could I forget you for a moment, Greg? Greg's a wealth manager in California and a master trader, and he was kind enough and generous enough to share everything that he'd learnt with all of us. And Justin is in the same mold, and he's an absolute monster at backtesting and Justin has back tested over 100 years of market data. 1 year, 2 years for some, 6 or 8 years for others. They all add up to well over 100 years. And he's been able to create what is the range within which we can expect. And he's done it on all markets, including Forex, and a few that we don't cover. And he's been able to set the benchmark, what we can expect within the range of win rate, ROI, return on investment. In this case, we express the return as a percentage of the CME margin because that's what you have to invest to have a trade. And all of these Forex and futures markets, they have a margin. Forex has an equivalent. They don't call it a margin. But that's the good faith money you have to put up to show that you can cover a certain amount of risk. And I've highlighted the parts of this that are important. And it starts at the beginning. He said, I've been very calm and relaxed trading the DC time cycles. And he says it helped him stay grounded. I've minimized my expectations and just solely focus on my daily routine while letting the markets take care of the rest. And that's perfect. That's where the stage you want to get to. But that requires an enormous amount of confidence in your program. Justin has that because he's tested this, as I say, well over 100 years of back data on a huge range of markets. And you can have access to that as well. It's video 4 on the home page of the website. It's around 30 minutes or so. Goodness sakes, you couldn't buy that back testing for big money. Justin's offering it for free. Go and have a look, immerse yourself in it, understand it. So he has an overall win-loss rate of 48%. It's not very high, is it? And folks who don't understand trading say, oh, I need a better win rate. I can give you a program that has a 92% win rate, but it doesn't make any real money because it doesn't trade very often. And when it does trade, it's so obvious that it doesn't go far enough. Why would you optimize a program for win rate or win-loss ratio? What does it matter? If you go to your bank and say, I've got a 92% win rate, they're not going to say, we're happy to lend you some money, guys. But if you go and tell your bank that you're making 400, 500, 600% on margin, sure, they'll love to talk to you about any funds you require and any help they can give you. So this is all, as he says, comfortably with the ranges he's seen in his paper training. And the last point here is total commitment per day at this point is about 15 minutes. Crazy ROI indeed, but that's what you've done. When you've learned the Danielcode, it's only going to take you 15, 20 minutes. And Justin trades 4 markets. It's only going to take you 15, 20 minutes a day to place all your trades. Do that, go away, go to your normal day job, go and play golf, go for a swim, go to the horse races, do whatever you like. If it's a nice day, get on a boat and go sailing. Nothing better. Right, moving along. I've shown you the 59 cycle on the 6-day chart, and the daily cycles work exactly the same. And these are the 2 videos from Justin that I want you to look at. They are extraordinary. Video 4, backtesting of the Danielcode time trading strategy on single bars over a period of cumulatively well over 100 years of data. And that is what you call a solid sample, folks. Burn that into your brain because it's important. So markets are orderly. You see that all the time on members' charts. Now, I know that a whole lot of you are not looking at members' charts. Some of you just don't get it. You're not subscribed to it. And for some of those who've got the packages that include members' charts, you're not looking at these charts very often. They are your bread and butter. They are your life's blood. They are your lifeline to future prosperity, wealth, and happiness. I promise you, if you're making a ton of money trading, you'll be happy. Don't tell me you need something else. The something else will come along anyway, I promise you. It always does. Okay, And then I've said sometimes it's predictable. This is the fourth seal from Frank de Beyer. As I've told you, Frank came to me as a young gentleman and did a live tutorial, and he absolutely immersed himself in time cycles from the Danielcode, and this is posted every Monday. So if you're not subscribed to Frank's fourth seal, which he does for gold, crude oil, and the S&P, you can subscribe to one or all of them. Let me tell you, from now until the end of the year, there is nothing more important than knowing what the time cycles are melding together. I've shown you some of them today just to give you a taste of it, and you should get subscribed to Frank's fourth seal. And just go to the services page at the website, just click the box with PayPal, and you'll be all set. These are the 4 videos that I find vitally, vitally important. Video 3, which I haven't talked about, that's a young couple, not such a young couple actually, from Boulder, Colorado. And the lady's name is Amy, and she's an absolute delight. And Amy had never seen a trading chart in her life until she came to me. And as she says, seeing is believing. They made 500% in 10 months. Seems impossible, but we did it. And it's happening all the time. It's there for you. All you've got to do is email me. Tell me you want to learn the great mysteries and magic. So this is Teach Yourself to Trade. This is our video training service. It's fairly short videos. They're all less than 90 minutes, I think. Some of them are less than 60 minutes. And these will just pop up in your members page, and you can go over them as often as you like, whenever you like. And there's a whole sequence of series of them. If you can do all of them, that's best to make you the best trader that I can. If that's either not practical for one reason or another at the moment, do the ones you can and be prepared to build on it as you get more knowledge from the other ones. And it seems to be doing very, very well. This is what the various lessons are. If you just go to that link I showed you and click on it, you'll see there's another link at the bottom here. And you click on either of those links. That'll tell you all about what the curriculum is, what my fees are, etc., etc. So this next slide tells you about the Danielcode Masterclass tutorial. This is where you do it one-on-one with me, and that takes 6 or 7, sometimes more, sessions. And as I say, Mark L. and Greg Palladini have both been kind enough to make some comments about how they found that experience. So W.D. Gann said, use all of your tools all of the time. Now, some of you know that I used to be a big-time Gann fan. In fact, I spent 8 or 10 years immersed in Gann. I did all the courses, including Harry Bowden's Safety in the Market course in Australia, which is a joke, a very bad joke. But a lot of you have been caught up in that, I know. And I had a woman in San Francisco, another one in London, and somewhere else I can't remember. They were buying me original Gann charts and original Gann letters. Whether they truly were original or not, I don't know. But I was in it. I was deeply immersed. I was a Gann man up to my ears in it. And the fallacy is that Gann trading signals should be followed. Gann never published a trading system. What he does is he has various things he's thought of and come up with, and he writes screeds and screeds about them. He's a terrific writer, and his courses are endless. They're like 5-6 inches thick. Some of them just go on and on and on. But eventually I found that that was not the way to go. But I do remember many of the things of his that I've read. One of which is use all of your tools all of the time. And I don't think many of you are doing that. So you've got your Danielcode price targets, how to create them and trade them. Remember, the Danielcode price targets come from the Danielcode time cycles. They're the same thing on a different axis. The DC time cycles are next. Major and minor time cycles. Beyond Masterclass, a vital tool. The long pull. all Danielcode signals are conditional upon being elected. In other words, for every signal we create, we tell you the number at which it's got to go to be elected or filled. You would say filled, I call them elected. The market chooses to go there. And these Danielcode trade signals often come early. And that's by design. That's how I've designed them. Signals that don't come early are useless, aren't they? And because Danielcode is unlike any other trading system, it's based on entirely different parameters. We often see Danielcode trade signals the rest of the world simply does not see. And these are massive opportunities, and we're sitting in the middle of one of them now. So what I'm going to show you here is what we've been doing this week, including tonight. For you people, it's a Friday morning for me. Most of you are in the States or Canada, I know. We've got a few European clients now, though, which is interesting. They usually miss the webinars. It's like 2 o'clock in the morning over there. This is oil. You had a TO3 buy signal today. Up it goes. This is the US dollar index, which I wanted to talk to you about. From the low, which sat right on a TO3 buy signal, you can see the close of that bar that has the lower arrow on it was right on the the blue line, I should say, at 96,300, almost perfectly. That set up a TO3 buy signal. 3 bars later, we had a little inside bar. The very next bar, we got our Beyond Masterclass Momo signal. That was a confirmed momentum signal. And that tells you this market's going to trend. Very high probability it's going to trend, which tells us to take your stops away a little bit. We don't want to be getting stopped out on 1 bar counter trends. Just give it a little bit of room to breathe, and look what you've got. All the money's the way up. You would have been long this market the day after the low if you're trading Danielcode time. That's how it works. And then 3 days later, you get the confirmation that this market now has a very high propensity to run a bit. And look at how accurate it is. Today's high, just about exactly at the black line, 98.68. Yesterday's high, which was also a key reversal bar, the high almost exactly at the blue line of 98,600. Perfection is another one of the great mysteries and magic of Danielcode. They're not thereabouts. They're not something rubbery like 50 days, 100-day moving averages, all of that stuff. That's great if you don't know anything else. We are a long, long way past that. This is the S&P, which is fighting overhead resistance. We had a buy signal today. Up it went, 1,600 odd dollars. This was copper. This was the trade from a few days ago. And that chart, when before I updated it, had a blue line right at that low where I've shown you the arrow there saying TO3 buy signal, exactly on that blue line, which was there on the older chart. You can go back and look at it in chart archives. You probably have to wait. I think Terry leaves these charts just for members for 30 days, and then they go to chart archives. But look at that buy signal in copper, straight up 14,800 odd dollars thereabouts. And I've told you, those of you who've done a tutorial with me, when you see these monsters move, put on your discretionary trailing stop. That'll lock in most of the money. Okay, that was very nice. This is the NASDAQ today, same thing. TO3 plus buy signal yesterday, up today. Where'd it go to? 22,375, the Danielcode blue line. I don't know why you options traders haven't woken up to this. If you want to know where this market's going to go, it's the next Danielcode number, red line or blue line. If it doesn't stop there, it'll go to the next one or the next one. It's amazing stuff. This is the Russell. All these equities look pretty much the same, don't they? Interesting. Tech, NASDAQ, is near its highest ever investment measured levels. What percentage of active traders are in the long side of that trade, and that's at historically high levels. The Russell is not far off its historic lows in terms of involvement and commitment of traders. I'm not talking about the COT reports. I'm talking about the percentage of active traders in this market who are actually invested in it at the moment. And it's at all-time, close enough to all-time lows, very near the all-time lows. It's complete disparity between these markets. The trading public has just got the idea that it's tech, and only tech. And that's going to change fairly soon. This is beans, folks. You can see we had two TO3 plus buy signals, one on the bar that gave us the low, and another one the next day on that inside bar that was pointing down just to get everyone off the track. Our buy signal was elected 2 bars up, $850 odd in there. This is silver, same thing. TO3 sell signal. Down it goes, not far. TO3 plus buy signal for today, up it goes. A little bit, not a lot. Wheat, TO3 sell signal right at the last high. It's now down 1, 2, 3, 4 days. This is UST bonds, which I suggest that you should be really, really thinking hard about this market. The opportunity for this market to go down is being fought dramatically. There are levels of support in here all the time. It's not going to hold, in my opinion. And when it breaks the lows, that's going to be some sort of a party. Make sure you're really switched on to UST bonds. And better still, make sure you've got the old Beyond Masterclass now called Trendability. You've got that tool, because it can tell you if the trend's going to run or if it's not. Vital information. This is natural gas. A bit late putting this up. We didn't get any intraday data on this for some reason today, but simple enough. TO3 buy signal on the previous chart, which has changed now. That close was right exactly on one of our blue lines, $1,500 into today's close. Nice enough. So, folks, if you haven't already, please help yourself to a free trial and ask your friends to have a free trial. It doesn't cost them anything, but it gives them an opportunity to become wealthy. And I do really trust you've enjoyed today because it's been my pleasure having you and talking about my favorite topic, markets. This is our standard disclaimer, folks. Basically, it says don't risk real money unless you are absolutely assured that you are a competent trader. It's really easy to lose your money if you don't know what you're doing in futures and forex markets. It's really easy. The good news is to make a lot of money once you do know what you're doing and you're properly trained. And the best way to get to that state is email me, take a Danielcode trading course. We will make you a competent trader, or better still, we can make you a super trader. So thank you for being with me. That was grand. And Michael asks, can Danielcode software work on NinjaTrader platform? Yes, it can, Michael. We can give you the studies in a form that you can program them in Ninja. It's very, very popular in Ninja, as we know. So glad to be here. Thank you, Jeff. I'm glad you enjoyed it. And thank you for your support, folks. I look forward to talking to you at our next webinar. For now, it's bye-bye for me.